Welcome everybody to a Rumble in the D. Well, I'm in Detroit, but not they all. All right, welcome to this debate: Bitcoin versus gold, gold versus Bitcoin. I have joining me now 4 experts, 2 on the gold side, 2 on the Bitcoin side, and they're going to spend the next hour yelling at each other and talking about gold or Bitcoin, or maybe we can come to an agreement at the end and say both. Maybe. No promises. Joining me now, I'm going to bring them on one at a time. My first panelist I'm going to introduce is Rich Checkan, President and COO of ASI. Where's my soundboard, producer? Where's my soundboard? There we go. Rich, welcome, sir.
Glad to be here. Thanks, Spencer.
All right, I'm sorry, Rich. I just lost my... There's my...
Uh-oh.
There we go. All right. Apologize for that.
Can you guess which side I'm on?
Yeah, I should have mentioned. Starting with Team Gold. Team Gold, Rich Checkan. Joining Rich on Team Gold is Kirk Chisholm, Wealth Manager and Principal at Innovative Advisory Group. Going to bring Kirk on now as well.
Thank you. Thank you very much.
All right. From the old gold to the new gold. Let's go to Team Bitcoin. I'm going to bring on Paul Rosenberg, author of the Freeman's Perspective newsletter and the co-founder of the Cryptohippie Anonymous VPN. Paul, welcome. And rounding out the bunch is Eryka, Gemma, Venture Director at Digital Asset Hedge Fund. Eryka, what's up? So we've got topics. We've got like 6 topics. We're going to spend the next hour debating the merits of crypto and the merits of gold. And I want to start by opening the floor up to some opening remarks. And let's start with Team Gold. Opening remarks. All right, Team Gold. Rich or Kirk, who wants to take the floor? Here's yours.
I'll jump in. Kirk, you can fill in any holes. Gold, I don't know what to say. This debate is happening because some clever marketing is out there, basically trying to make the case that Bitcoin is gold or gold-like. And you said in the intro, the new gold. Nothing could be further from the truth. Just saying it doesn't make it so. Bitcoin is a 12-year-old asset class. We're talking teen angst, awkward years, trying to figure itself out. We don't know what the heck it's going to be yet. It's certainly not acting like gold. Gold has got a 5,000-year history. If Bitcoin wants to be compared to gold, let's stick around another 4,988 years and see how it plays out.
I don't have much to say beyond that. I think Rich did a great job, but I would like to fill in one quick point. Is this show is advertised as the new gold? I'm actually offended by that. How is it the new gold? And the fact that you're referring to it as the new gold should speak for itself. That should have us. That should be a win right here, because you're referring to Bitcoin as the new gold, which means, you know, we're already on the top of the heap. So I don't really know where else to go with that.
That's a good point. It's not the Bitcoin standard, it's the gold standard, make no mistake.
But I'll let the Bitcoin crew respond, because I think they deserve a response to the new gold category.
So, yeah, maybe I can say my opening arguments now. We don't need to say anything bad about gold. All we have to talk about is the good of Bitcoin. So we're not going to, because I think that everybody here agrees that gold is a great store of value, but Bitcoin is a scarce digital asset with unchangeable monetary policy. Its rate of inflation is less than gold. It's under 2%, and it will be decreasing ultimately to 0. There's only ever going to be 21 million Bitcoin that can exist and is divisible to the 8th decimal place. There's about 18.6 million Bitcoin today, and Bitcoin is convertible to over 150 national currencies 24/7. It can be stored or it can be stored personally, or it can be custodied with third parties, including banks and qualified custodians. And the adoption of Bitcoin is only growing over time. I think that this technology is going to bring a lot more innovation. The first use case for the technology Bitcoin is bringing is just money, but it's going to be much more. So go ahead, Paul. I know you've got some good things to say.
Yeah. Bitcoin is superior to gold in just about every way. It is the finest store of value ever been conceived by man. It is the greatest collateral ever been conceived by man. It is an open door to a better world in ways that gold, while it's certainly fine, can't touch. Bitcoin is, I'll say this probably 5 times as we go along today. Bitcoin is the future taking root in the world right now, and I truly believe that.
All right, let's go
Yep.
to.
If you bought $1 of gold 11.5 years ago, it'd be $1.69. And if you bought $1 of Bitcoin 11.5 years ago, it'd be about $80 million. Just to preface.
Oh,
Okay.
them's fighting words.
It's surprising to hear all the talk about Bitcoin focused on price. That convinces me it's not a speculation at all.
All right, let's save the fireworks for the meat of our topics. Let's go to topic number 1, hedging. All right, the question I'm going to pose to you 4 is, which asset is a better hedge against volatility in the stock market? Team Gold, we'll start with you.
You want to start off, Kirk, or you want?
Yeah, I'll start. I'll start in kind of the alternative approach. I think you take the traditional approach, Rich. So I want to talk about hedging in a little bit of maybe an alternative way that maybe most of the audience may not be familiar with. So a few things. So one, I deal with a lot of quant money managers, and these are people that are basically looking at the data, and they're looking at ways to manage money, and they look at different asset classes as a way to diversify. So they're looking at correlations, they're looking at different aspects. And what's interesting is, most of them have equities and they have fixed income in their portfolios because those are traditional sources of kind of offsetting risk. But what I find fascinating is gold is frequently in there as a hedge. And, these are data geeks. I'm a data geek, so I can respect that. And these are people who are looking at the data and seeing that gold is a great hedge against the volatility of the stock market. So I don't really need to explain more than that, but when you have really smart people in a room and they all come up with the same conclusion, that's not always the best thing, but I see that, really the writing's on the wall with that one. So I wanted to make that point. The next point I want to make is also that if you look at in the past, the US dollar was pegged to gold, right? There was the gold standard. And, if you look at when we went off the gold standard, the price of gold skyrocketed, right? So we did hedge against gold with our currency for many, many decades. And it was only when it went off that really inflation started to take off. So I wanted to make those 2 points, and I know Rich has some great points as well, so I'll let him kind of go next.
Well, the big one for me here is this. When you want to hedge against the stock market, that means you have to, correct me if I'm wrong, Kirk, you need to be negatively correlated, right? Not track it perfectly. And that's what's happening. Bitcoin is following the stock market. Now, I'm a firm believer that we saw inflation as a result of the stimulus in 2008 and 2009. And that has presented itself in astronomical, elevated, crazy stock market values. That's exactly what we're seeing in Bitcoin. It is not a hedge against the stock market. It's tracking the stock market. That's not a hedge.
I actually want to have one final point before we go to the other team, because you mentioned inflation. And maybe we actually will hit that on the next point. But gold actually, if you look at, there's a meat period between 2010 and 2020 where gold kind of went sideways. And that actually tracks really well in the deflation that I think that we were having at the time. I know it may not have shown up in the government statistics, but I track inflation quite closely. And I had a thesis that we were in a deflationary period during that time. and gold didn't do as well during that time. So I think it's actually, it really does well in terms of inflationary periods.
All right, team Bitcoin.
Want to go first, or should I, Paul?
You go ahead, Eryka. I'll fill in the gaps.
Yeah. So actually, Bitcoin is very uncorrelated to the traditional stock market. I would say that if you do see any correlation, Bitcoin is viewed on a logarithmic chart. So any growth that the stock market might have, Bitcoin has exponentially more. And then I would also say that in terms of like hedges against inflation, gold and Bitcoin are similar in that they are both outside of the control of individual governments, and that's what makes it interesting. But I think that if you want to see gold as something that has been a store of value for for thousands of years, gold, stays in purchasing power, but Bitcoin grows in purchasing power over time because it is a new asset. So, I mean, a hedge against inflation, I think everybody should be thinking about that, considering how much money is being printed. I mean, they just printed $1.8 trillion, which is more than the Bitcoin market cap right now, showing you how early we still are to Bitcoin and how much potential there is for growth. And then also how much money is being printed like crazy. It's definitely important for people to be thinking about that. But gold is good is in terms of remaining stable, but Bitcoin is going to grow more and more, as we've seen already this year.
All right. As a hedge against stock markets, market volatility, for the short term, I wouldn't use Bitcoin as a hedge against stock prices next week, because Bitcoin's a different thing. If you want to go long term, well, why even bother with stocks? Bitcoin goes up. It's went from 100 to 1,000 to 10,000. Now it's going up to the $100,000 range. If we follow the stock to flow model, which seems to be the one that's working for Bitcoin, then it's going to go a lot higher after that. So if you want to give it a little bit of time, then Bitcoin's a no-brainer. Why stay the same when your thing is worth a whole lot more? So Bitcoin, the price of entry to Bitcoin is you're going to have to be able to take it when you have a bad day or a bad week or a bad month. Sorry, that's the price. If you want 10-time returns every 4 years, you're going to have to suck it up, because this is a new thing and people get frightened and they pull out and there's a dip in the exchange rate. Well, sucks. But for the people who've been inside and who've toughed it out, my God. So yeah, Bitcoin long term is better.
Can I just jump back in here? I guess can't sit and let that go. You just described a fantastic speculation. It rises astronomically, it drops, deal with it. Where it goes, who knows? We're still trying to figure this thing out. Gold, this is what you're comparing. You're saying it's going to be the new gold. Well, then it had damn well better act like gold if it's going to be the new gold, and it's just flat out not, because people aren't buying it for the reasons they buy gold. They're buying it plain and simple for speculation. That's why you see the high valuations and the high volatility. It's not a currency. Nobody's using it as currency. Nobody wants to miss out on the next leg up, so they're not even spending it. They're just holding on to it because they're scared to.
No. Listen, you're missing. You're way off the line.
Okay,
People
help
use
me.
it for business every day. That's why it has its own independent pricing structure, unlike gold, which you rely upon banks and rigged markets. There's 100 times more paper gold than there is physical. Bitcoin has actual markets. 2,000 transactions go by every number of minutes. Real people buying real things. That's what gives Bitcoin its base. So, look, it's not a store. It's not anything you can put put a tag on. It's something new. It's something different. So when you decide to say it's a speculation,
It is.
it's not a speculation. It's a stock. It's a bond. It's a company. It's a Ponzi. Oh no, it's a tulip. Oh no, it's none of those things.
Tulip's a good example.
It's mathematics. And that's just, it's a new thing. And anytime you try to put an old world tag on it, you're pretty much missing the point.
I think you
And
just
it
made
is
our
used
argument,
by
Paul.
zillions
Don't
of
call
people.
it gold, because that's an old tag. That's a 5,000-year-old tag. Stop putting the gold tag on it. It is not gold. Figure out what it is and tell us what it is.
I
It's a
don't have to
tulip.
figure out what
It's
it
a
is.
tulip
It
of a
is what
different
it is.
color.
It is a thing.
Exactly. It's another .com bubble.
It's a digital gold, and if you think about market volatility in comparison to gold, the reason why there is so much volatility in Bitcoin is, first of all, it's really a feature, not a bug, especially at this point. And it's because the market cap of Bitcoin is 1/10 that of gold, like barely 1/10 of gold. So the stability is just not there inherently because it is math, right? The denominator is not as big as the denominator of gold, but we're going to see it get to that point eventually. And you want to make sure that, you know, the people who bought gold a long time ago when they had that opportunity to, they had the ability to capitalize on those gains over time. And the same thing is happening with Bitcoin right now. So I don't know, traditional stock markets are a little scary considering, you know, the government is buying into stocks and all these different, like, people are probably spending their loan money in the stock market, which is really the government's money. So this weird, I mean, everybody
Which is
here,
our money. by
yeah,
the way.
everybody here agrees that fiat
Wait for the
currency
tax
is
bill.
worse, so.
All right.
All right.
Maybe that silence is our cue to move on to number 2 here, and I think
Yes.
I think we should go ahead and do that. Talk about inflation. All right. Why is your asset a good way to protect against inflation? Team Bitcoin. We'll start you.
I know that Rich is going to say, don't talk about numbers because he doesn't want us to talk about numbers because then gold will lose. But definitely over the last 10 years, in terms of, you know, just as a hedge against inflation, over the last 10 years, Bitcoin is up 5 million% roughly, and gold is up over the last 10 years about 19%. So that kind of also ties to the fact that inflation is happening because we got off the gold standard, and part of getting off the gold standard consisted of 1933, all of the gold being confiscated and taken into like government like control or whatever. So that's also impossible with Bitcoin. So there's 2 reasons why Bitcoin is I mean, traditionally it has tracked better than gold, just numbers wise. But then in terms of confiscatability, it's definitely better to have Bitcoin than gold.
Yeah. And, you know, again, we have to remember that there are only 21 million Bitcoins that are ever going to exist. They can't, there's not more. There's not going to be more. You can't make more. The program says 21 million, and 18.6 or 18.7 million exist already. Even the supply of gold goes up 2% a year or so. When the price is higher, it goes up a little more. That does not happen with Bitcoin. Bitcoin is a fixed receptacle. And the more that the wealth of the world sees this, which is what's been going on over the last year, that this is a fixed receptacle based upon math, can't be taken away, they can't get more of it, you can't, there's nothing that's going to be done. It's math. Then they go in because it's fixed. It's not going anywhere, and it's never going to go be watered down and taken away.
Yeah, and also too, it's like the fact that there is 21 million Bitcoin that are ever going to be in existence. We know this is trackable. You don't have to trust us that that's what we're saying. You can go on the blockchain and read it yourself. It's open source code for people to be able to look at. And with gold, you kind of have to trust that, okay, this is all the gold that's in circulation. You have to trust that they are, you know, it is 2% per year when it comes to inflation. So just the verifiability of what's happening with inflation is much more advanced on Bitcoin.
Go ahead, Rich.
Team,
You go.
You want to start out, or?
You can go ahead. I got plenty.
All right. Well, you know, Kirk and I were talking a little bit on this subject, actually. He shared an article with me from Oliver Rennick, I think, with Forbes, and it was published in Forbes. And basically what he said is he's looking at the correlation of gold versus long-term real rates and Bitcoin versus long-term real rates. And this is how you want to get your protection against inflation. And let's face it, Bitcoin is not tracking. There's virtually no correlation. It does from time to time. It's completely random, the correlation to real long-term rates, whereas gold, and there's the argument out there that people are substituting Bitcoin for gold, and we're seeing this mass exodus of money out of gold. That's not true either. Gold is actually going ahead and tracking like it always has historically, year after year, decade after decade. So gold is doing its job as a hedge against inflation. Bitcoin still hasn't found its way.
Yeah, I'd like to first point out that Paul was referring to Bitcoin in a receptacle in the same sentence, and I've got a receptacle for Bitcoin. But that being said, I think when you look at inflation and deflation, gold has a 5,000-year history of tracking inflation, and you can't buy that overnight. Right. I mean, you can look at an asset like Bitcoin and say, oh, it protects against inflation. Frankly, there's not a lot of data yet. And I think any data geek, and I think he's a math guy, he'll kind of, attest to this. Like, you need a lot of data. You need a big data set to actually be able to prove one way or the other. So I don't think you can prove that yet. And there's a lot of potential for Bitcoin to down the road, when it's a stable asset, because right now it's a speculative asset, which any kind of global macro hedge fund manager will tell you that they're investing in it because it's a great speculation for all the reasons that Eryka and Paul had said. However, it's not protection against inflation. So we've had inflation. I'll make this argument because I know it's maybe a little deep, but a lot of people thought in 2008 we'd have massive inflation. Everybody was worried about hyperinflation. It's going to go through the roof. Right now, they're worried about that again because of all the money they're printing that we're all going to have to pay back at some point. But frankly, over the last 10 years, we've had close to zero inflation in my calculations. Sometimes a little deflation, sometimes a little inflation, but it's been really stagnant. And I'm not worried about hyperinflation. And I'll make this point really quickly, that everyone who's worried about inflation, and I know it's in the news right now, if anything, it's transitory. So if you look at inflation, people calculate it by the amount of money that's being printed, and that's one method. However, if you take all of that money and you stick it in a bank vault, it's not causing inflation. And it's you can look at what we call the velocity of money. And if you looked at the last year, that's gone through the floor. So we don't really have inflation. So you can't really measure inflation you can't just look at one number and say this is inflation. It's a question of what inflation is measuring. Is it asset inflation? Is it wage inflation? Is it, consumer good inflation? Like, there's all different types. But I think if you look over history, the best way to look at this is, you can look at history, and there has been, currency inflation over time. Like, I think that's just kind of what's happened. And you can look at, ancient England, hundreds of years ago, and you could buy a gentleman's suit in London for an ounce of gold. You can do that today. So it's really a great hedge against inflation over time. And it's really done a great job at that. And Bitcoin may have that ability over time, but right now, all it is a speculation. There's not enough data to point towards whether it's a good hedge or not.
Agreed.
And I think that'll, well, first of all, I do disagree with you that inflation isn't really happening, that it's almost zero, because I definitely, there used to be 5 muffins in the bag of muffins that I would buy, and now there's only 3, but they didn't change the price of the bag of muffins, or the holes in the bottom of my peanut butter cans are now deeper, and they didn't change the outside packaging at all. It's very sneaky the way that inflation comes in. But I also think that in terms of data to see how Bitcoin is a hedge against inflation, maybe we can't see that in the United States per se, but we can see that in other countries where hyperinflation is happening now and has already happened. So if we take, for example, Venezuela, where instead of buying wood to burn, the people just burn the dollars because there's so much money that's been printed. In countries like that, Caracas, Venezuela is one of the #1 places where Bitcoin is adopted, and it's because they need this hedge against inflation, and they're not using gold. So they can't even get there's a lot of issues with Venezuela's gold right now, but they have to use Bitcoin. The people of Venezuela must use it, and it's a great hedge of inflation historically, and there is data for that.
Just for your reference, Eryka, I thought you'd appreciate the Zim dollars I have here.
Those actually 89 in 1980, and now with 10 trillion, you can't buy a pack of gum.
Yeah. I know. I have some of those too. They've actually gone up in price. I hope you made some money on that.
I've got stacks of these things.
Yeah.
All right, let's move on here to topic numero tres. Make the case for make the case for the safety of your asset, and I know this has already come up before, as a store of value. Let's start with Team Bitcoin.
Paul, you could take
Sure,
it.
I'll go. Bitcoin is based upon math. That's it. If 2 + 2 = 4, Bitcoin is stable.
But we're doubting that now.
It's just mathematics. That's all it is. And it's a computer program. There's no office you can raid and hold a gun to somebody's head and make them change the accounts. It's a computer program. It exists on I don't know how many thousands of computers in the world. No one knows, as a matter of fact, which is a really good thing. So it can't go away. It's not like Enron, where it can go up to the moon and then they really don't have the money and then it crashes. It's a computer program. So long as 2 human beings on the planet Earth want to use Bitcoin, it exists with all of its features intact. So it's not going away. It can't go away. Even if they send SWAT teams out to try to get it from people, it's just computer keys. You can store it in any kind of way you want. Put it on USB sticks, copy down some seed words and bury them in the ground, stick them inside of your coat, put them inside of a table. It doesn't matter. You can do anything with it. It's not going away, and it's ridiculously hard to steal en masse. There's a few times somebody gets hacked or something. Okay, well, that's life on planet Earth. But this thing's not going away ever.
Yeah, and in terms of the safety of it, I just have to look historically at what's happened in the past before, and they took away the gold in 1933 and they confiscated all of it, and that's a lot harder to do with Bitcoin. And then if we think, so Bitcoin has this, it even created this new word called unconfiscatable, which I don't think was really a word, and it wasn't widely used before Bitcoin, and now it's heavily used. There's even a conference about being unconfiscatable in the Bitcoin world, because the safety of my asset really just depends on maintaining my seed phrase as safe as possible. So this is 12 to 24 words that I can just remember in my head, and I can have my wealth intact wherever I go. Whereas with gold, you have to have certain safety measures in place because it is a physical asset. So for me, this is one of the great innovations about Bitcoin, is that you can cross borders with your wealth intact and not have to worry about the different restrictions that governments are putting on between borders.
Kirk?
Yeah, so I want to talk about 2 things that Paul said first, which is having a gun to your head. That's already happened multiple times with people with cryptocurrencies, specifically Bitcoin. So I wouldn't say that it's not safe because it's math, or it's safe because it's math. I don't think that really applies here. I think the safety of the asset in many ways is very similar with gold and Bitcoin. If somebody wants to rob you, they're going to rob you. Bitcoin happens to be digital, so there's more possibility of being hacked from around the world. Some North Korean or Chinese hackers that are out there trying to hack everybody, they can't hack my gold. They don't know I have it. It's sitting in a drawer somewhere. They can't get it. But with a digital asset, that is possible. Now, you might claim it's very improbable, which it might be, but it's still possible. And there are a lot of people out there, the people who aren't as probably sharp with cryptocurrencies as Eric and Paul, people like myself who may be a little bit more newbies when it comes to cryptocurrency. When we're looking at that as an asset, most people are not familiar with all of the protections that need to be in place to protect a digital asset. So they're going to do silly things like just leave it on their computer or leave it on their phone, and then somebody could just steal it. Where they're not going to be walking around with gold coins in their pocket because they realize that would be stupid. They could get robbed. So I think when it comes to safety, you could argue both ways, but I think we are in a digital world. People are getting more and more access to digital assets, which makes them more easy to steal. I do want to say, Eryka made some comment about gold being confiscated. Actually, that was based on U.S. citizens trusting the government. That was because people thought it was for the good of the country. If you tried to do that today, it would never happen because no one would trust the government with their gold. That's just the truth of it. So I think when you're talking about a store of value, you're not going to, just give that up willingly. Now, I will say this because this has come up in the past, but just imagine for a moment, you're driving down the street in your car and you see this flash in the sky and you're scared and you think, oh, it's a nuclear explosion, but it isn't. It's an EMP. And then you realize, oh, I have this cryptocurrency in my, in my safe. Where did it go? Oh my God. Where did all my cryptocurrency, where'd my Bitcoin go? Oh, my gold's still there, but I can't access my cryptocurrency. There are a lot of things like that we don't know yet. It hasn't happened, but that is possible. So with gold, really the concern is somebody going to steal it from me, which I think is probably equally possible with both assets. Go ahead, Rich.
Yeah, I want to add to a couple points. I don't want to get bogged down in the threat to Bitcoin because I think there's a big one out there, and hopefully I'll have time to raise it a little bit later. But on the confiscation, the only reason that occurred back in 1933 was so they could devalue the dollar. All right, all these people out there that are trying to fear you into buying gold or Bitcoin or anything because of the fear of confiscation is a bunch of hooey. Back in 1933, gold and the dollar were convertible. So they collected all the gold, then they raised the official price of gold and therefore devalued the dollar, which was the end game. You can't do that these days with gold because it's not tied to the dollar. And it's a tiny market in the big picture. So I just kind of want to put that to bed, but I want to get back on track to the question at hand, which is it a safe store of value? I use the example, and Kurt touched on it a little bit earlier, but back in Roman times, an ounce of gold bought a toga. In 1913, when the Fed was created, gold was about $18 an ounce. Back then, a nice new business suit cost an ounce of gold. Today, at $17.89 an ounce or whatever it is, gold will buy you a nice new business suit, but $18 sure won't. That is a store of purchasing power. That's gold's role. That's the role Bitcoin says it wants to fill, or one of them, and it's just not. When you have wild mood swings and volatility, that's not a safe, reliable, dependable store of value. When your Bitcoin can go from 20,000 down to 3,500, when it can go to 60 and drop back into the 40s, when it can drop 10% in 2 days, like it just did yesterday and the day before, that is not a safe, dependable, reliable store of value. Gold has been for 5,000 years.
I want to make one more final point that I forgot to mention. So Doug Casey publishes this, and I think it was from Aristotle originally, but they talk about the 5 characteristics of sound money.
Yep.
Durable, divisible, convenient, consistent, and has value outside of itself. So look at gold as an example. It is all of those things. And you think about it, people wear jewelry. We wear gold jewelry. I don't, but I look at my wedding ring, right? I'm married. Here, look, gold. I don't know if Paul or Eryka are married, but I imagine they probably have a gold wedding band as well, if they are. Gold is a store of value. It has value outside of a currency. And people used gold for currencies because of these characteristics, because there was a store of value there. So I think that in amongst itself is a really strong reason why it's the best store of value.
It's really the only element, noble metal, that can fill that function. It's the world's only real currency ever.
Until Bitcoin came and has this. So
that's right. Math is here, but careful with your math. 2 + 2 may not equal 4 anymore. There's people out there that say that's just what you're indoctrinated to believe.
But
those are nice Bitcoin earrings, Eryka.
But all of us right now, we're using computers, right? So the way that, if you want to look at the intrinsic value of Bitcoin, what it is all of these computers that are dedicating their computing power to running these math problems all over the world. And the incentive for more of these computers to come online is incredible. I mean, for example, I don't want to say too much because we might talk about like ecological impact at some point. But the effect of people that are trying to mine for more Bitcoin and plug more of these computers into the system, that is the real underlying value of Bitcoin. Is what is the power of the network. Or there was a question in the chat room, and it was talking about what happens if AI continues to grow and supercomputers grow. Will it be able to hack the Bitcoin network? And my answer to that, and which also ties to the intrinsic value of Bitcoin, is that as the network of AI and supercomputers grows in power, so does the computing power of Bitcoin. Bitcoin's hash power, meaning the number, like just the amount of power that's being dedicated to right now, is at all-time highs, and it only gets stronger and stronger. And what's great about this is even if it gets weaker, people will still be incentivized to plug their computers in to run this. So while it may not be like flashy, you definitely have intrinsic value, which is this real world system of verifying Bitcoin, which is called proof of work. And it's just, I mean, the real world layer that's connecting us to the blockchain. And it's the same thing with the internet. I mean, nobody wears the internet, right? And you can't have that as like some gold band, but it's still very, very valuable, and there's no actual asset to it, except for, you know, the connectivity that it brings to people.
That's actually a good segue, Eryka, into our next topic here, which is really about ESG and the mining concerns of both gold and Bitcoin. So as Eryka alluded to, there are some ESG concerns as it relates to Bitcoin, but obviously to gold too. Gold, you know, requires literally digging into the earth, and also Bitcoin requires a lot of electricity. So there are some serious ESG concerns for both assets. Can either both of you, all of you, explain this away? Explain why this is not a big concern for your asset. Let's start with gold.
Yeah, I could jump on this. The World Gold Council has done a lot of work in this regard over the years, and very recently working with the UN on their sustainable development goals, trying to eliminate some of the bad things that are happening or have happened in the gold industry, whether it be, the tailings or the contamination of the environment, bad effects on the indigenous personnel near the mines. Most recently, we're talking about use of child labor, things of this nature. So the UN is focused on that. The gold market, the gold industry is focused on that. I could tell you it is minimal compared to what it could be if it wasn't regulated. You know, gold has been around a long time. It is a important regulated asset. And as a result, the industry is regulated. And if there is some sort of bad type of behavior going on, it is crushed immediately. Bars won't be allowed to trade on the exchanges, etc. Companies that had these practices in place go out of business, and their material is basically shunned. We've seen this over the past decade or two. So gold is kind of self-regulating itself, making sure that it does business well, and there really aren't a whole lot of those violations to start with. Bitcoin, you can't poo-poo this idea of energy consumption. I mean, you say, well, okay, it takes a lot of energy, it's not a big deal. Well, it takes the same amount of energy to mine Bitcoin that it does to basically power the entire country of Ireland for a year. That's a lot of energy, and it has an impact. You can't tell me that Bitcoin is green. And all the comments I hear from proponents of Bitcoin and that it's okay is, listen, if something is this important, you just have to look the other way with the consequences. So we'll get rid of SUVs, but we'll continue mining Bitcoin because we're going to change the world. I'm sorry, I don't think most people will buy into that. So there are some real concerns. The other real concern is where you get the electricity is where it's the cheapest. So you may see some of these abuses as they start to mine Bitcoin in areas where they can get it cheaper because they're taking advantage of the local situation and the local people.
Yeah, I think, Rich very eloquently described, I think, our case. I would like to point one thing out, though, that usually is not brought up in these kind of conversations, which is jobs. right? Mining produces jobs. That helps people feed their family. And environmental concerns aside, because, Rich just talked about it, so I don't think I could say it any better. But, mining produces jobs, and a lot of jobs, because you have the whole process from digging it out of the ground to melting it down to minting it, all of that, it produces jobs. Whereas you think about Bitcoin doesn't produce jobs unless you want to give your jobs to a computer, which at some point a lot of us will. I know there's a lot of concerns about that with universal basic income and things like that. In AI, people are worried about, our large segments of society losing their jobs. John Kerry's excuse to that was, hey, we can just repurpose these people and they can make solar panels. But the reality is, this is something that is a productive. It may not be environmentally friendly, but it is self-regulating. But it does produce jobs, and people do need jobs to be productive members of society.
So, you want to go first, Paul? I don't want to dominate.
Yeah, I'm kind of itching.
I know.
First of all,
Me too.
let me just defend gold this time, because if you want to dig stuff out of the ground, it's hard, and they have to use chemicals like cyanides to try to get this stuff apart, and it's hard to do. So you know what? That's life. I think the gold business is doing a good job of keeping it as safe as possible and as doing it as effectively as possible, and I have no fault with them on that. You want magically perfect? Go to a different planet. It doesn't exist here. Now, in terms of Bitcoin, yeah, it uses electricity. Of course it does. What would you rather have it use? The United States, fiat currencies, which are based fundamentally upon the ability to blow stuff up and an army? How much does that cost? But in terms of electrical, Bitcoin is a perfect load for electric utility. This is the thing they want. It's constant, 24 hours a day. You want to know that something that's bad for electric utilities that makes things crazy? It's air conditioning, because you only use it, 40, 50, 80 days a year, and it's only during the day, very little at night. It makes power companies nuts. They have to build special facilities just to handle the surges. That makes them crazy. Bitcoin is perfect for utility companies. It's what they want. You don't see them complaining. It's the perfect thing for them. And yeah, it uses electricity again. If you want absolutely magically perfect, don't come to this planet, because we ain't got it here. You want good? We got Bitcoin. It's really good.
Yeah, and also, okay, so two things you said. First thing is jobs. So right now, blockchain developer is the #1 job on LinkedIn that's in demand, right? And it's actually one of the highest paying jobs right now, is being a blockchain developer. And I think that maybe not Bitcoin per se, but the entire industry of blockchain that Bitcoin has invented is creating not just jobs, but higher quality jobs. So while the roles of maybe like lawyers for smart contracts, or lawyers might be replaced by smart contracts, and you're going to have like accountants replaced by this ledger that just runs inherently because of the math problems that are being run in the background. While those jobs might be replaced or modified, you're seeing higher paying and more skilled jobs come to the forefront because of Bitcoin and the technology that's created. Also, talking about green energy, this is one of my absolute favorite questions to answer, because, for one, okay, so just taking real world costs of moving money around, all those like guarded vans that move cash around, and then the cost to move money around right now physically is super, super high. And those are really incomparable. I don't even think anybody's running numbers on those, as well as the cloud, right? George Gilder talks about this in his book, and George Gilder will also be at Freedom Fest, which will be at Freedom Fest too. So a little plug for that if you guys are going to Freedom Fest. But he talks about this, the cloud. It seems like this big ethereal thing, and we think that it's up in the sky. But really what it is, it's computers running math problems and running numbers in these huge warehouses. And nobody's really complaining about that, because the cloud is not a threat to the government's money system. And if there is anything that you do want to be verified by and use energy, it's going to be a global money system that is unmanipulatable by individual governments or individual entities. Now, the reason why I love answering this question, though, is because green energy, there's this thing called Satoshi's second gift. Satoshi is the anonymous creator of Bitcoin. And his second gift really is green energy, because What you have now is you have people who have incentives to create green energy solutions, whereas beforehand there was no incentive. The only incentive to maybe put some solar panels on your house would be that you would get a tax break. But now, because people know that Bitcoin uses energy to mine new Bitcoin, you have people who are mining Bitcoin. They know, okay, in 4 years, my production and the amount of Bitcoin that I'm going to be rewarded with is going to get cut in half. So I have to get real creative on the different ways that I make energy efficient. So a couple things that Bitcoin has done, just by miners having to figure out, because this is, I mean, the market, and I think everybody will agree on this, that the market is the best distributor of goods and services. It's also the best innovator, not government tax breaks on one end. So what's happening is, for example, when it comes to mining for oil, the byproduct of mining for oil is methane. And beforehand, they used to have millions of dollars to get rid of this methane, ecologically sound. And now what they do is they burn that methane and they mine Bitcoin with it. So it's just the ability to make this this energy usage more efficient, and knowing that, you know, there's probably as much energy spent as Bitcoin is, like, on people watching TV around the world, but people aren't criticizing that. But with Bitcoin, because it is a form of money that's global and you want it to be solid, I'm personally okay with it using that much energy, and the amount of good that it's done to create more innovative solutions is only going to grow over time.
Got a quick question for you. Where is most of the Bitcoin mined in this world today?
China.
Yeah.
Where's the gold, though?
And how are they getting their power for that?
Probably.
Don't tell me it's green. It's coal. Vast majority.
Where's most of the gold right now?
What's that?
Where's most of the gold right now?
Canada, Africa. Yeah.
I feel like it's both. Like, a lot of the gold production and a lot of the materials to make gold is also centralized in China. Like, China is just a powerhouse. China even has most of the facilities and tools when it comes to creating, like, airports and concrete, right? So China is just a huge powerhouse in general.
Okay. It's not green.
Yeah, but neither is the cloud, right? But nobody's pulling numbers on the cloud, which is frustrating because, you know, the cloud and Amazon web server, I'm sure Amazon web servers probably uses as much as much as Bitcoin, but nobody cares about that because it's not being publicly criticized. But there are no incentives to plug more for individuals to plug more computers into AWS, but there is incentives for people to figure out how can I more efficiently create energy for this. I mean, I think that's just one example, but I've seen so many examples online of, like, using some weird new coolant system to cool, you know, the miners. So a lot of different innovations are happening.
All right, let's move on here. We're actually, time is flying and not having fun. So yeah, we're going to try to get to the rest of this right here. What is the biggest risk for your asset? Team Bitcoin, go.
Oh, the biggest risk.
Go ahead, Eryka. I'm having a hard time thinking of a big risk.
I can think of one for you, Paul.
Yeah, I got a couple.
I'm sure you got 5.
So, okay, I'll tell you. So the biggest risk in our asset is it's called a 51% attack, right? So what that means is that you would have to get control of 51+% of the computers that are running the Bitcoin algorithm and convince them to basically choose the wrong chain and approve the wrong transactions, right? But it's interesting because it's a risk, but then it's also been dealt with already with game theory. Because if you were able to get 51+% of the computing power that runs on Bitcoin, I mean, first of all, you would have to figure out who can I manipulate, and you don't even know who's running Bitcoin on their computers. You don't know who's running a mining farm, right? And then let's say that you did that, and you were able to convince 51+% of these computers to do something illicit. The biggest thing they could do is do a double spend. And then also there are people that are, anyway, sorry, the biggest thing that they could do is choose the wrong chain and approve the wrong transactions. But if you spend that much energy and that much time trying to get 51+% of these computers that are running Bitcoin over to you, then you spend a lot of money and energy. So why would you destroy the asset that you've put that much energy into hacking, right? It doesn't make sense because you would have to spend a lot of money to do that. So why wouldn't you just continue to validate it? So it's kind of like, it's an issue, the 51% attack, but it's also game theory, and the way that Bitcoin has been built has taken care of that as a problem.
All right, and I'll continue and go. The big fear that people have, and again, most of everything bad you hear about Bitcoin is an imagination. And if you remember nothing that I say today, remember this: imagined fears are infinite. You can imagine fears all day, all night, tens, hundreds, thousands, millions over time. Imaginary fears are infinite. And what Bitcoin has going against it is fear. But let me deal with this one, and that is that governments are going to make it illegal, and they are going to make it impossible to use. Well, for one thing, it doesn't work. They just tried to make it illegal in Nigeria, and the exchange rate of Bitcoin in Nigeria went up. And they've had to make it illegal again to some extent. It's very, very hard to stop. You're not going to shut down the internet. The spy agencies will never let anybody shut down the internet. The internet is the greatest surveillance system in the history of mankind. No Soviet apparatchik ever dreamed of something like social media. Oh my God. But I'm getting off the subject. They can't shut it down. And even if they want to, there was a really important case that came and went a few weeks ago when the SEC went after Tether, the big stable coin. And what it came down to at the end is they really couldn't hurt Tether. And they settled in a very proper, too big to fail manner. They had no admission of guilt. They paid a small fine, and they've got to file quarterly reports. That's the same thing they do to Citibank and HSBC and so on when they get caught doing something nasty, which means that the SEC believed that by trying to backdoor hurt Bitcoin, they'd be hurting themselves and their friends worse. So I think the whole thing about governments are going to put down the boot, it's not really going to happen anymore. It may happen somewhere. And there are, someone may try to run some kind of Holocaust and drag people away in vans for using it. But as a practical matter, it's really not going to happen.
Yeah, and also too, my argument when it comes to the government shutting things down, I just remember those FBI warnings that were on the front of videos before you would watch them, and it's like $50,000 fine if you're caught like illegally downloading and distributing this video. But BitTorrent's out there, and people would still do it, and they would get away with it. And these are like teenagers, like little kids, right? That were still illegally torrenting movies. And so I'm just saying that you can't really stop the power of the internet. And not only that, but Bitcoin as its invention of the blockchain is creating completely new mesh networks that are outside, using that computing power to create networks that are outside of the internet that we have today. So just the innovations are just continually stacking on top of each other because of blockchain, which is made by Bitcoin.
Eric, you want to go first or me?
You can go first. I've got a good secondary
They're
follow-up.
scared, Paul.
Now, in terms of the question was, what's the biggest risk to gold? I really don't see there's much outside of a golden meteor hitting the earth and devaluing the price per ounce in a massive way. I don't see that happening anytime soon. The biggest fear with gold is securing it and working with trusted people, or keeping a low profile and holding on to it safely yourself. And with a long history, there are many ways to do that and skin that cat. I got to counteract Paul here. I think, I've got a couple issues with government can't shut this down. It has in some countries. I think one of the comments on the side there was Turkey, for instance. But I don't want to get into minutia. I've long maintained that the government's control over people is the money supply. That dictates that they have to have a central bank issued fiat of some sort or currency of some sort. I always wonder why Bitcoin wasn't patented, why the founder did not make or mine a whole ton of Bitcoin, him or herself, right at the start to be super rich. I don't know why they didn't come out and say, I'm the one, so they could be loved by humanity for the great changes they've implemented. There's a lot of speculation out there. I don't have the answers. There's going to be more speculation that this was created by the government. Okay, and this is a way in the end to head towards central bank digital currencies, CBDCs, where you are going to see your privacy eliminated and government control over the money supply and the populace increased exponentially, because it's just going to be a digital form of what we have now, which is a bunch of garbage. Okay, so I do see the government as your threat. There's a number of ways they could shut you down. They can go after individuals. I just Googled on my Google machine, Bitcoin money laundering. And in about a half a second, I got 5.2 million hits. That wasn't the same number last year. Make no mistake, the government is stepping up action on anti-money laundering and other ways to go after people that they think are doing things incorrectly. They could shut down the miners and the power supplies and things to let them mine Bitcoin and then just handle it themselves and introduce their own currency. I think that's where this is headed. And, I'm not a conspiracy theorist by nature, but I think it's shocking that nobody took credit for this. Nobody got a patent for this. Nobody put a whole bunch of Bitcoin aside knowing what they would be. I think we're walking down the path that we were told to walk down.
Okay, but what about gold though?
Well, yeah. So I have a more elegant answer to what Rich was saying, and I think I'll talk about gold in a minute. But one of the risks that that Bitcoin has, it's not the government shutting it down. Because I think there are some examples of that happening, and it, just like anything else, if you want to make something scarce, it will be more valuable. That's just the reality. That's human nature. I just pulled out a Zim dollar. It's valuable because I couldn't find any, so I'm going to go buy some before you can't get them anymore, right? So that scarcity makes it more valuable, and I think that's important to understand. So I think the concept of Bitcoin getting shut down is very small. I think what's more realistic, and I hope no one from the government is listening to the show, is they will tax it. And you can get away with, saying it's illegal and some people still do it, but if you tax it, now you've got a different issue. So look at Sweden. They don't want people driving cars, so there's a 120% tax for every car you buy. So if the car is, $10,000, you're paying $22,000 because you're paying the 10 plus the extra 12 for the car. So if they really want to submarine Bitcoin, all they have to do is put a huge tax on it. Now, if you see these other governments coming out there, China has just announced this. It's been known for a while, but they just announced that they're going to start their digital yuan. India, I know, has the capabilities to do that. Some other countries have. The U.S. government is still, quote unquote, experimenting, according to, I forget, it wasn't Yellen, it was someone else that said they were experimenting with it. So at some point, they're going to make a digital currency, and that's going to change the landscape significantly. And like Rich said, there's you talk about government control, and Paul had mentioned this, government control and oversight is going to be massive at that point. And, Bitcoin, you may not know who owns it, but if there's a crime committed, they could very easily follow the chain of who sold it to who, and you can pick all the people off in that chain. So for the police, it's an open and shut case. So I think there's it's not perfect. I think Bitcoin was designed very eloquently, but it's certainly not far from perfect. I mean, you look at gold for some of the risks with gold, and I think what Rich said, it's technically it's probably confiscation. But no one trusts the government because they confiscated them before. So no one's going to, readily give up their gold. It's like asking people to give up their guns. They're just not.
There's no reason to anymore either because it's not convertible.
Right. But it still has value. But you notice that the government has not put some of these parameters on gold like they put on some other things. Like if you want to have gold offshore, you can do that. You can have real estate. There's certain things that are allowed, and they may not have been. There may not have been as much oversight, but you notice in your tax returns this year, they're asking if you own any cryptocurrencies.
Last year,
they're not asking if you own any gold. So I think, there's a changing dynamic going on here with government control. And I think really that's the biggest risk for any of these assets.
Right.
Yeah, and I mean, you said something earlier, Rich, when you said governments control the money supply, and that is how it's been, and that's how it's always been, almost, right? But what if technology has provided for a way where we don't have to have that anymore? Because we've seen how it's been, how it's always been, which is that governments, when given too much power, can't help but manipulate the money supply. But now we don't even have to deal with that because we have Bitcoin, and it's just math running these computer problems, and nobody can manipulate it. And then also too, the reasons why I would say that Satoshi, first of all, the early Bitcoin adopters, they definitely did come out and save a lot of Bitcoin because they knew that it would happen. But they're also private people because they know about these issues with the government being able to track it and Bitcoin being pseudonymous. And then the reason why Satoshi didn't come out and say, hey, I'm Satoshi, like, be happy that I've created this, is because, the same reason why, when Mark Zuckerberg created Libra, Facebook's digital currency, he was immediately himself called into Congress and questioned. And when you don't know who the creator, and that means he has too much power and control. Like, for example, like Elon Musk is on Joe Rogan's show, like smoking weed, and then his stock drops, right? With Bitcoin, we don't really want that. So to be able to point to one person is not to point to one person is a benefit. So, yeah.
All right, we're up against the clock here, so I just want to wrap it up, and we're going
to wait. They didn't say what was bad about gold.
You're right. They didn't, and
Nothing to say.
You noticed that, Eryka?
I covered it. There's nothing to say.
they get the merits. Don't worry, they get the merits. All right, here's what we're going to do. We're going to wrap it up real quick. Paul already did this, so Paul is not going to answer. But Eryka, Rich, and Kirk, say something nice about the other side. Rich,
Me first?
yeah.
Okay. You may not get this from this conversation, but Eryka knows well. I think Paul knows. I think Kirk knows. I'm a huge fan of Bitcoin. Okay. It didn't come out today because I had to be on the other side. My only issue with Bitcoin is calling it the new gold. To be the new gold, it has to act like gold. It's not. Plain and simple. It's not a hedge. It's not currency. It's not anything that gold is. It is a speculative asset that's rising in value. I would dare say that most people that own it have never done the math, don't understand it. They're buying in because they see the price going higher. That's it. I saw some statistics. They're right on the Benzinga site saying how many traders lose money in cryptocurrencies, and you got to put disclaimers on everything you say. That is not a stable, long-term store of wealth. That is a speculation. I think there's room in your portfolio for both. I really love the outsized speculation potential in Bitcoin. I'm participating in it myself. I am not complaining. But I think if you want to hold on to that wealth and store it and protect it, that's what gold does. That's what it's done for 5,000 years. Take some of those profits off the top, let the rest continue to run, but bank those profits in something that you know is proven to be a store of value.
All right, Eryka, say something nice about gold.
Gold is shiny. It's pretty. If you guys want to send me any gifts in gold, jewelry is preferred. I like necklaces, bracelets, rings, whatever it is. You can't do that in Bitcoin, so that's really nice. And then I also think that, when it comes to, obviously Bitcoin is great. Bitcoin, bullets, bullion, like those are the best assets. Bullion, Bitcoin, bullets, and beer. That's probably your best inflation assets. But Bitcoin is, and I think you're right. You are right, Rich, where it says that we're not the new gold, but I would say Bitcoin is digital gold. And although it has all these other benefits, we really want people to understand in saying digital gold that it has two characteristics. It cannot be printed arbitrarily, and it's outside the control of government. So gold I like for the shiny features, of course, because I'm a girl. But otherwise, Bitcoin is definitely the store of value that I think that young people maybe should be looking at, because I mean, when I see how much debt the country is in, and I see that you can't really escape into gold away from that, like you have to escape into something that maybe is a little bit more advanced in order to be able to, have wealth to feed your kids later on when, because we went from $22 trillion and we're now at $28 trillion within a period of about 11 months. And that's just completely unsustainable. And I just don't see gold as something that we can use as that next ledge that we hop to for safety for the younger generation. But you can send me gold if you'd like, Rich. Don't worry.
Many generations in the past prove otherwise. Go ahead, Kirk.
And Kirk.
All right, and I'll keep mine quick so I can cede some time to Paul because I know he's got some good things to say. I just want to kind of point out the value of perspective. So, we manage money for individual people and families, and we use both gold and Bitcoin in portfolios because they're very different assets and they have different purposes. I'm not buying the Bitcoin for storage of wealth and for inflation protection. I'm buying it for speculation and for the same math that Paul has been talking about this whole episode. Is that I've done the math, I've looked at it, I've talked to the really smart people like Paul and Eryka who understand why you would invest in Bitcoin or other cryptos. So there are reasons to do it. And if you don't understand it, you probably shouldn't be doing it because it's not a simple thesis. There are many really smart people who've taken years to come around to Bitcoin and other cryptocurrencies because they just didn't believe, they thought it was another digital tulip. And who knows? It might be. I'm not going to make that claim, but I can say based on my assessment of Bitcoin that it is becoming institutionally adopted. Institutions are building infrastructure around Bitcoin and other cryptos. You see these big financial institutions, once they start adopting it, it's eventually going to become mainstream. And when it becomes mainstream, that's when more and more people are going to start to invest in it. So it does have a potential long-term viability. And these financial institutions do not put money into these things lightly. So I will say, the nice marks about Bitcoin is there is a lot of potential there. And gold has been around for a long time. It has a very different purpose. Go ahead, Paul.
All right, I'll make this brief. Gold is decentralized money. That's a really good thing. My problem with the gold market, for lack of a better word, is that more people don't use it. Gold and silver in daily commerce. One of the problems with gold and silver is the pricing structure, which is dictated by very, very large players. And it's complicated, but I won't go into the details. If you use gold and silver in daily commerce, you have a parallel pricing structure, and it becomes independent. So I want people to use gold and silver, but I want them to use it on a daily basis, not just to leave it on a shelf. Yeah, leave some on a shelf. It's good insurance and everything that Rich and Kirk have been saying, but use it.
All right. We're going to do this very scientifically. In the chat, I want to see ones. If you thought Team Bitcoin won the debate, I want to see twos. If you thought Team Gold won the debate, while you put those numbers in the chat, I want to thank our panelists, Rich Checkan, Kirk Chisholm, Paul Rosenberg, and Eryka Gemma for joining us here on a Friday afternoon. I'm seeing some ones in. Okay, Donkey Limit put 0. Come on now. That's not even. It wasn't an,
the chat too.
I'm seeing some 3s. Also not an option, guys. Get out. Mostly 1s though, guys. Everyone, thank you so much. Smash the like button if you want more debates like this. Thanks to Eryka, Paul, Kirk, and Rich. Cannabis Insider is up next, and then we're gonna hop. Everyone have a great weekend, and thanks a lot, guys. This was a lot of fun.
Take care.
Take
Thank
care,
you.
guys.
Bye, guys.
Bye.